I guess the obvious question is, hey, how do we get, those two tenants out and turn over those units to market rent? Well, you know what most people have been doing over the last couple of years, and at least in my networks, is the very common thing is cash for keys, or some combination of an N13 renovation notice with cash, or anything in there. Welcome back to REI Hot Seat. Andrew Hines here with the solo episode. I'm going to be going over a triplex deal in Penetanguishene right now. This was sent to me from somebody in my network. I thought I'd go ahead and cover it. So if you look here on screen, you can see what this is. It's a red brick building. Looks like it has an addition on the side of it. And it's a triplex. So legal non-conforming triplex. Unit sizes and spec are here. So we've got a lower unit, 500 square foot, one bed. And then we've got a main level and an upper level at about 800 square foot a piece. One of the unique things about this deal is it's under $500,000. So I know what you might be thinking, Penetanguishene, that's up there. It's right near Midland. It's not super far north, but it's, getting a little further up there. And not a market I'm super familiar with, but I did jump on Facebook Marketplace and looked up some of the rental rates that are being requested. And it looks like, a 2-bedroom up there could go for anywhere from $1,800 and up. One beds are starting around $1,400 typically, and I based some of my numbers off of those assumptions. So I guess the question to ask is, what are people doing in Ontario right now? I know people are still doing deals, and we go over deals on this show, but we scrutinize pretty well, and I know not everybody maybe scrutinizes to that level. So I'm curious, drop it in the comments. Like, what kind of deals are people doing in Ontario right now? Are people still buying in the GTA, in this network, and our viewer base? And if so, what type of deals are you finding that are working? Because I want to know these things. I want to hear from my network, what's working for them, what kind of deals are making sense. To me, it's all about creativity. I mean, as it always sort of was, because even when the getting was good, so to speak, competition was high for good deals. So you were either going to take, secondary deals or may potentially pay a little too much because you're competing with other offers, or you were going to get creative. In other words, make the deal, which I've always been a fan of, but that's work. Let's face it, that is work, and you got to have systems for that. So let's look at the numbers for this one. I'm going to talk through some scenarios of how I think it might work. And then, of course, if you have questions and you want to go look at this deal, it's an on-market deal. You could always speak with Jake, who would be likely happy to help you with him or a member of his team. Link is in the description for this video for that. Okay, so starting here at the top, as you'll see on my screen, I have a couple of scenarios. Let's start with a rent roll. So we've got two 2-bed units and a 1-bed. Here are the current rents. Unit 2 is not currently rented. So the realtor who sent this to me suggested $1,400 is what they thought. But I mean, looking online at the comparables, I think that was a little understated potentially. So I put market rent just being at $1,800. I'll leave $1,400 in the current rent because I'd say that'd be a sort of a worst case scenario. Okay, so let's just start with the base level. I mean, even if you're getting this for $500,000, it's going to be tough to make those numbers work, as we know, with just the higher interest rates. But let's run through the expenses. So we've got, starting at the top of their rent roll, we've got combined rent, assuming that $1,400 for the vacant unit being filled would be $3,545. Then we've got taxes at $3,100. $3,000 was my assumption for insurance. Maintenance and management, I've put both at 5%. Even if you're going to self-manage, you want to pay yourself. So, I mean, I've started doing that more recently just because I want to build in my expense. If it's my own internal team that's handling something, I should be allocating a number for that. Common utilities, this was given by the realtor. So $3,600, $2,500, and $2,100 for electric, gas, and water sewage. And landscaping and snow, this wasn't given to me from the realtor, and there's a good chance that maybe the tenants handle this, but I've included a landscaping and snow expense because that's sort of just something I would expect to pay on a triplex. We have a miscellaneous here that I've included for just $500 a month. I've obviously included the purchase price for $499 here, which puts it at a cap of 4.41% based on current rents. Obviously, there's room to improve that based on the rents that I saw on Facebook Marketplace, or it looks like there's room anyway. So if you just did the normal route of an 80% first mortgage, 30-year AMs, say you were able to get a 6% mortgage, although I know things have been changing a bit lately with rates going up. Obviously, the numbers aren't looking so great right off the hop. So there's some things we need to consider. One is you could implement a strategy to do a cash for keys here. So we have those 2 units that are under rented. And let's just say hypothetically that my rents here at $1,800, and $1,200 are accurate. There's potentially an additional $1,255 to be earned here. So if there's $1,255 that we can just add on, let's just go ahead and do that. We'll just take our current rents and then add on the variance. Actually, easier thing to do. Let's just go ahead, take that $4,800. So this is the market rent hypothetical. And obviously this is just rough. I would want to double confirm these market rent estimations, but let's just see what the deal looks like then. So still $49 and $499 purchase price, still keeping maintenance and management at 5%. So those will go up as a percentage of rent. Well, as a percentage, they stay the same, but as a dollar amount, they change. Now we've got our 80% mortgage still at 6% here, and we have cash flow. So I guess the obvious question is, hey, how do we get, those 2 tenants out and turn over those units to market rent? Well, you know what most people have been doing over the last couple of years, and at least in my networks, is the very common thing is cash for keys, or some combination of an N13 renovation notice with cash or anything in there. Does that still work? Let me know in the comments. Or what are your experiences with this right now? I know a lot of people I speak with say that it's gotten harder. You've had to pay more. Of course, people are looking at what's out there for rents and seeing, hey, it's a lot more expensive out there, and maybe not as inclined to do a cash for keys deal. So this is by no means a guarantee, but you could even factor in paying $30,000 to do so, to just get 2 tenants to maybe move on. Will they do it? Maybe, maybe not. They are obviously under Ontario's laws allowed to stay if they choose to. So I wanted to evaluate, what does this look like if they did say yes? And of course, I don't want to bank on it, but if they did say yes, what does my investment look like? So I just added it to down payment. I added a churn fee of $20,000, and you could adjust that. Maybe I think it's $30,000, $15,000 each per tenant. So that just automatically adds to the down payment here, because you're not going to be able to finance that portion unless, of course, you go back and get a refinance with a bank. No guarantees there. So what are some of my other assumptions? Well, I've got my mortgage pay down, 5-year term. I'm just assuming the average, this formula just assumes an average amount for the 5 years. So 57.22 is basically the average pay down across those 5 years on the term. 1% is my appreciation that I'm building in. So I've gotten even more conservative on this over the last year and a half as we've seen values come down. Of course, I don't think that's going to happen forever. I eventually do expect them to start coming back up, but who knows when. So keeping it super conservative at 1%. Some people might even choose 0. Okay, so when you combine all these returns and then we have some cash flow, you're looking at $17,000 a year in return. And if we weigh that against the total investment, including land transfer, down payment, and legal fees, well, legal fees aren't going to be quite that much. They'll be more like, call it $2,000. You're about a 12.8% return. Now, I know in probably most landlords' heads, 12.8 isn't going to do it. It's not going to do it for me. I'm not going to go be a landlord for 12.8 in most scenarios, unless I see a way of creating more return down the road, or I can't build it into my numbers, but I have an angle. If I have an angle, I'm interested in that. But wait, there's more. So I did ask the obvious question when I'm speaking with a realtor who's, asking me about a deal. And I've talked to Jake about this a bunch, and we often speak about this on the show. Is there an opportunity to get a vendor take back mortgage? And I was told that there is. So that's more of a transition piece. I was told that there is an opportunity, but it's probably only for a year, maybe a bit longer. I think for negotiating a deal, like say you came at them with a near full price offer, but say I want a vendor take back for 2%. Let's just see what that looks like. So if you go the 80%, we'll just throw 1,000 year amortization in there, and we'll say, we want 3%, for instance. Now that turns the cash flow up, assuming you could get those tenants out. But if we're say somewhere in the middle, like maybe you get one of the tenants out, not both, so we end up somewhere between 3,500 and 48. Maybe we're at 4,000 a month in rent. What does that look like? Well, you'd still be cash flowing quite significantly if you were able to turn over just one of those units. So you'd have a bit of an investment there. But then, of course, a year comes and what do you expect to happen in a year? Are rates going to be that much different? I don't know that they are. Heck, they could be higher. So it's not one of those things that you want to bank on. I think that, traditionally this is kind of a nice deal. It's just the current climate kind of makes it not. The lot here it's somewhere around 200 feet. I think it's 190 deep by 70 wide. So there may be potential for adding an additional dwelling unit. And this is where it comes down to your team. Like, do you have people who can do that kind of thing? And for what price? What do the existing bylaws allow for in Penetanguishene? I'm guessing that being that it's a smaller town, you could probably go in and negotiate something with the people in the city and potentially allow for maybe even a larger additional dwelling unit if you think that's valuable. But what can you get for rent for that, and is it worth it? Those are all valid questions to ask. So I show this deal because I think that this is sort of indicative of a fairly standard deal on the market right now. And there are obviously people still buying this stuff. So I'm just curious, how are you making these deals work? What unique strategies are you bringing in that allow these deals to work? It seems to me that there's definitely a way. I shouldn't say definitely. It seems to me that there is a way to make this deal cash flow. But it is some work, and not everybody's going to be up for that. But there is definitely a segment of the population that's right up their alley, and they'll take on that deal. There's also room that maybe the rents are higher than I'm thinking. Like if you think about how many people they're bringing into Ontario, rents have been getting pushed up and up and up. And, depending on what your belief is, maybe you believe that these rents are even understated at $1,800 to $1,200. I wasn't assuming any renovations. Perhaps these units need some renovations. I didn't really have photos of the inside of them. So there's many variables here, lots to consider. Like I said, I'd love to hear your thoughts on what type of deal you're investing in Ontario right now. If you're investing, how you're making the numbers work, what unique strategies you're using. Let me know. I'll greatly look forward to that, and we'll see you again next week.